Over the last year, my stock market portfolios have drastically outperformed any large stock index, including the S&P 500, Dow Jones Industrial Average, NASDAQ, and the Russell 2000. In 2019, I posted a yearly stock market gain of 53%, and year-to-date in 2020, I'm up another 50%. A lot of these returns are directly from the success of one of my stock holdings in my Roth IRA. And I'm sure you figured out by now by the title of this video, but I am talking about Tesla, ticker symbol TSLA. Welcome back to the channel, guys. Before we jump into the video, I just want to say that the kind of gains that I made from Tesla are extraordinary. And I would not be surprised if I never have an investment more successful over 2 years than Tesla again for the rest of my life. As you'll see in this video, there are definitely mistakes I made along the way. And luckily, there are lessons to be learned from them, so that's why I'm sharing them in this video with you. Currently, all the money that I initially invested in Tesla has been withdrawn in addition to some gains on it. So I am only investing money right now that has been earned by holding Tesla over the past 2 years. They're currently my largest holding in my Roth IRA, with a total gain on my current shares of over 850% and profits of about $7,000. Before we jump into the video, please like the video, subscribe to the channel, and turn on post notifications so you're notified whenever I post a new video. With that said, let's start from the beginning of my time investing in Tesla, and we will take a look at all the buy and sell orders I placed along the way, and where that fits in with some of the major news events associated with Tesla. On August 7, 2018, the infamous tweet from Elon Musk hit Twitter, saying that he was considering taking Tesla private at $420 per share, and that he had secured funding if he wanted to do this. 2 days later, I decided to buy 2 shares of Tesla at $360 per share, because I thought it was a really easy way to make $60 per share when the deal ultimately happened at $420. In the coming weeks, news came out that funding was not secured for the transaction, and the stock dropped dramatically. However, during this time period, I really started to look into Tesla as a company and realized that the company had a lot of potential in the future. So on August 30th, I decided to buy 1 more share of Tesla at $301 per share to bring my total cost basis per share down. Buying more shares to bring your cost basis down is a trend that you'll see throughout this video. And this experience is one of the reasons I'm a large advocate of building a position in a stock over the course of a few months, maybe out to a year or 2. For the next 5 months, I didn't do anything with my Tesla position, even though there was a ton going on with the stock. The SEC sued Elon Musk over his $420 tweet, and ultimately, this led to Elon stepping down as Tesla's chairman and the appointment of more independent directors on Tesla's board. This requirement ultimately limited Elon's power over the company and made him more accountable to the other shareholders, which I think was probably a good idea for the company. However, during this time, there was also a lot of fear from shareholders that Elon would not be able to be Tesla's CEO, which would limit the potential of the company, in my opinion. After this point, the large news items for Tesla became more positive, but the stock price continued to go down. In January, Tesla's Shanghai factory broke ground, which was another substantial positive driving factor for the company. Despite the positive news and the lack of some of Elon's antics on Twitter, the stock dropped all the way down into the $170 range in June. Throughout this time period, I continued to buy more stock in the company. I bought 2 shares at $270 per share, then another 3 shares at $232 per share. It needs to be noted that the 3 shares that I bought in April had fallen 35% from when I first initiated my position. But since I continued to believe in the company long term, I felt like I was still getting a good deal. In October, I decided to sell 2 of my shares in Tesla for $252, which was incredibly stupid. At that point, I had held all of my shares since the stock bottomed out in the $170 range. So all of my shares were up about 40%. But a lesson that I learned the hard way is, if you believe in a company's future, do not sell the shares just because the stock price jumps a lot in a short period of time. For example, one of my other stocks, in less than 2 months of investing, is up almost 60% from when I bought into it. But I have not sold any shares because the long-term vision of the stock is much higher than where it is now. But I'll do a video on that stock in the future if you guys want to, but we'll focus on Tesla in this one. I think back on this decision and get a little mad because there was no real reason for me to sell these shares. I knew the long-term prospects for the company, and I knew the stock price did not fully reflect the true value of Tesla. But I decided to sell anyways just because the stock price went up about 40% in a few months, and I couldn't see this continuing for a long period of time because I'd never been invested in a company who's had crazy returns over a short period of time. Over the following couple months, the stock price exploded. Tesla announced its Cybertruck, which I think was a substantial catalyst for the stock price jump. From the point that I sold those shares to the beginning of the bull market caused by the pandemic, the stock price jumped from $252 to above $900 per share in February. During this price jump, I ended up selling out of 2 shares, and these sell orders I'm not nearly as upset about because they were made to limit the exposure to Tesla that my overall portfolio had. I think regardless of the company that you own, when 30 to 35 or more % of your portfolio is in one stock, it's smart to trim that position a little bit, and that's what those orders did. It wasn't because the stock price ran up over a period of time, it's just that Tesla started to become too large of a position in my portfolio, and I wanted to remain somewhat diversified. I think we all know some of the events that took place during and following the pandemic outbreak. The stock dropped 60%, and unfortunately, I did not buy back a few shares of Tesla during that time, because I was focusing on building up some of the other parts of my portfolio. But the stock price recovered very quickly, and fueled by positive Q2 earnings, in which they reported their 4th consecutive profitable quarter, the stock exceeded $2,000 per share. And then the company decided to do a 5-to-1 stock split, which just added to the hype that Tesla already had. And on the day that the stock split happened, the price jumped 15% from an adjusted stock price of $443 per share to over $500 in one day. On that one day, I placed a sell order for 2 shares at $460 per share because they were bumping up against that 35% of my portfolio, and I wanted to trim the position back a little bit. But the stock continued to jump during that day, and when it hit $490 per share, I sold another share. And that brings us to today and my current position in Tesla. I currently own 17 shares of Tesla stock with an average cost basis per share of $48. In addition to the stock that I still own, along the way I've also realized over $2,000 in profits, and I've completely pulled out all the money that I initially invested. So to summarize, owning Tesla has taught me that buying a stock only on the news of a possible buyout is stupid. Luckily, it got me involved with the company, and it allowed me to better understand the company when the deal fell through, but that's not something I'll look to do moving forward. It's also taught me that building a position over time is better than all at once. If I had dumped a bunch of money into Tesla right away, I never would have been able to take advantage of the stock dropping by about 50%. I would also have felt really stupid for buying a stock and watching it drop by half without the ability to buy more at lower prices. I learned that selling a stock just because it goes up in price is stupid. I sold 2 shares at $250 because the stock price went up 40%. But if I'd held those shares, they would have experienced another 800% gain to this date. And finally, I learned that it's important to keep your head on straight when investing in controversial stocks like Tesla. Every day for the last 2 years, there's been a new piece of news about Tesla, and in the end, most of it doesn't matter. As long as the company you're investing in remains fundamentally the same as when you bought in, and you think it's undervalued compared to its future cash flows, the news about a stupid tweet or a bull investor opening up a large short position does not matter. You need to figure out how to pay attention to the company, see the direction that it's going, and ignore all the stuff that doesn't matter. So, now the question becomes, what do I plan on doing with my Tesla shares right now and moving forward into the future? To keep my answers short, I plan on holding these shares that I have for a long period of time, and will only consider selling if Tesla continues to skyrocket and becomes too large a portion of my portfolio, or if something fundamentally changes to a point where their success in the future is seriously in question. I have a valuation model that I've built out that generates a base, bear, and bull case for the stock, but I think this video is long enough right now without having to go through all of that today. However, if you guys want to see a video dedicated to that, please let me know in the comments below, like this video, and subscribe so when I do make it, you will not miss out on the video when I release it in the future. I will see you guys in the next video.